Hey, good morning, everybody. So we got PPI numbers coming in shortly. The Dow is currently up 150 points pre-market. NASDAQ up 80 points. What's expected from PPI today? An increase of 0.2%. At the same time, the 10-year yield is at 3.48. Up, breaking news. Here we go. So I'm going to update everybody as it comes in.
What we have is up 3/10, up
3/10 is strong. It's hot. Dow just dropped. Futures just dropped.
That's a bit hotter than expected. And this one's very interesting because up 4/10 on month-over-month core was zero last month. It was zero. So we have moved higher there. That's significant.
So again, 0.2 was expected. We're in at 0.3. The Dow went from plus 200 points. Now we're minus 93 points. Now we're minus 150 points. Now we're minus 168 points. Okay, we're bouncing back only to a minus 130 points. Again, this is not good news. Just going to listen real quick.
Headliner, final demand,
It's terrible.
7.2 expected, 7.4 is what arrived, and the rearview mirror is 8%, and the high water mark here is 11.7. The high water mark actually,
They keep talking about the high water mark and what we saw months ago and years ago.
So you can see that we've come down, and 7.4 is the lowest level since that number. And if we go to 6.2 for core year over year, that was expected to be 5.9. So also hotter than expected.
Yeah, these numbers are coming in hot. So we saw a bit of a relief rally. And again, I was expecting it yesterday, and I said the NASDAQ and the Qs are owed about 3%. And we had a good day yesterday. There was some buying closing out Wednesday. But again, everybody was waiting on PPI. So here's what I'm seeing. November PPI a year ago, we're up 7.4%. So yes, we were up 8%. The fact that we're only up 7.4%, people can say, oh, that's good news. But understand the 10-year note, which I just mentioned, which pre-market was sitting at 3.46 is now 3.51, up 5 basis points. I'm assuming the 2-year note is up as well. Let me just, US dollar is probably a little higher. So the US dollar, let's talk about that. So earlier in the week, I mentioned the US dollar, it was pressing 105.50 up from 104.50. When the US dollar goes up, when the 2-year rate goes up, the 10-year rate goes up, the market goes down. So what I said I expected to happen was that the interest rates, the 2-year, the 10-year, they'd come back down. It was almost like a mountain or a plateau, and they would come back down. What happened? We saw that same thing. And what do we see this morning? A spike back up. Why? We're seeing a spike back up because PPI was estimated to come in at 0.2%, and it came in at 0.3%. Ex food and energy was supposed to come in at 0.2%, came in at 0.4%. So again, the numbers came in hot. Now, what the market was expecting was either in line. If the market was in line, and that's what it was preparing for pre-market, when the Dow was up 200 points, 190 points, tech was up 80 points. Now tech is down 80 points. So I will speak about some specific stocks that I'm looking at, but let's get into the market real quick, okay? US dollar, I spoke about 2-year, 10-year, yes. Okay, here we go. Go back the last week. This week, the Dow is down 1.9%. It is the largest weekly decline. That's excluding today's trading, excluding Friday. So Monday through Thursday, down 1.9% on the Dow just for the week. It's the largest weekly decline in 10 weeks, in approximately 2.5 months as we date back to, I guess, the end of September. The SPY this week is down 2.7% just for this week. So that is a major move. For it to reverse, those numbers had to come in cool. And the fact that the numbers came in a little hotter than expected tells me that we're still in the bearish trend. I was hoping for a bull run. I was looking for dips, buying the dips. That goes into my trading strategy from yesterday, and I'll go over that really quickly. The NASDAQ just this week is off 3.3%. It's the largest decline in the last 5 weeks. So my trading strategy, and I'll speak about the SPY ranges in a little so we know what to expect today. But my trading strategy going into this week, same as what was working for me. I was buying the dips, buying calls on the SPY, buying calls on the QQQ. Monday, took the loss. Tuesday, took the loss. Wednesday, I said to myself, I'm just not trading. Maybe I'm not seeing the market right. We all go through these spells. Some people last one day. Some people it lasts 1 week. Some people have a terrible month. Me, I was having a tough 2 days where my entry and my exits were just wrong. Wednesday, I just decided I don't want to trade. Take a step back. Let's get back into trading yesterday, Thursday. So I started trading light. But let's talk about the SPY ranges yesterday, and then we'll go into today. So on Wednesday, 395 the top, 392 or slightly there under the bottom. So I said to myself, okay, I know 395 is either going to be support and resistance on the SPY. So going into yesterday, I told myself support. Now, Romeo and Tukey joined me the other day, and we said 393 could be the bottom side. So what happened when the market opened? We opened at 396. We dropped down to 393 very quickly. The low yesterday was 393.27. At about 393.50, I got into my SPY calls for the first time. Why? Because I was expecting 395, possibly higher. I mentioned pre-market that if the market was strong like I thought, it could make it all the way up to 398 or slightly there under and reject. And that's what we saw. So my first position, I was in with 395 strike because, again, I saw support at 395, even though we were sitting at 393.50. I went in, I paid $1.04. Then I paid 94 cents. After that, the option went down all the way to $77 per contract. I bought some more, I think at like 79 or maybe it was 80 or 81. What did I do? I secured 41% on the trade. Market spiked back up. I sold. What happened next? When the market went back down to the same level of 395, what did I do? I told myself, well, the SPY can technically go up to 396, 397. Let me buy the same position. 395 calls that expired yesterday. I went in the position again. I was in for around the same price point again, because once it works the first time and I found what I thought was the bottom, I did it the second time. And again, I got a little more out of those contracts. I got 42% out of those contracts. Understanding that when the SPY spiked up to 397, those same contracts were up over like 150%. So again, I took 40% first trade, 40% second trade. Now, what did I do on my third trade, which I exited out of at 3:59 p.m.? Same thing, same thought process. I told everybody, I'm looking for support at 395. We found support at 395. I entered into calls that expired today. So you're all saying, well, shit, that position is probably getting rocked. No, not necessarily, because I was looking for $2.85 per contract on the contracts that I got in at $2 and $201. So in at 200, I said I'm going to make 40% or 41%. So I'm looking for 282, 283, 285 was the number. So I had it at 285. It spiked to 282 2 times. Did I sell? No, because my ask was in at 285. Now, what happened? A couple minutes right before the market closed, it hit 285, and thereafter from 4 to 415, which you can still trade the SPY options, the Qs, the UVXY, probably even the VIX. No, maybe not the VIX. But again, it spiked over 290. So my position exited out at 285. So yesterday, 3 trades, and again, I was coming off a losing day Monday, a losing day Tuesday, did not want to trade Wednesday, pretty stressed. I just moved last week. So I said to myself, safer plays, smaller positions. So the first time I was in for 30 contracts, I think I made about $1,400. The second time, I think I was in for 18 contracts. And the third time, 12 contracts, all making 40%. So that was my game plan yesterday. Now going into today, where we had PPI numbers came out, I made my prediction and I said, okay, if we're bullish, if the numbers come in cool, right, and the market reacts positively, I thought a bull run, we could see 404 on the SPY. On the S&P, that would just be 4,040. Did not happen. Okay, let's recap. PPI numbers came in. The Dow was up 180 points, 170 points. It went down 200 points. Now it's sitting at minus 120. So there's big inflection. Now, what could possibly happen? If the market is going to go down today and you're big money and you got invested in a bullish position, and trust me, if you guys think you're getting screwed, some big institutions, some hedge funds made large calculated risks that PPI was going to come in line and the market was going to spike up. We saw that yesterday when the market went to 397, then closed down, and then pre-market when we went up to 398. Okay, so again, 398, which has been rejection, was probably going to turn into support if the numbers came in cool and the market reacted positively. But that 398 level, to me, not going to happen today. In fact, what's likely to happen if the 2-year and the 10-year stay high, and that's what I'll be tracking all day, because same as last week, if the 2-year and 10-year, which spiked last week, and I said, just give it a couple days, it'll come right back to that level. When it came back down to the level a day and a half ago, market reacted bullishly. Now that we're back at that level and the 2-year and the 10-year are going up, that puts bearish pressure on the market. And now these institutions are thinking to themselves, okay, well, inflation or PPI came in hot. The Fed is speaking next week. We have CPI numbers next week. What if CPI, which is expected, I think, to gain 1%, 0.1% next week? Let's say it comes in hotter. Let's say instead of 0.1%, it comes in at 0.2 or even 0.3. Well, that's going to tell everybody the Fed still has to be aggressive. They're not being aggressive enough. And that is what's driving the fear in the market. And the stocks will take a dump. Now, let's remember, when Romeo joined myself and Tukey, what did he tell us? He said, yeah, we could see a Santa Claus rally. But if he had to make a guess on the SPY, he thought we were going to see 385 on the SPY before the end of the year. So we're sitting at 393. Then we were sitting at 395, 396. And again, he came on and he said, I still think we're going to see 385. Did I agree with him? Not necessarily. But again, you watch, you have predictions, you watch, you wait, and you see how they play out. And then if your predictions are correct, then you know what positions to enter into. Me, again, I was expecting the market to go up. I was expecting inline numbers today. So I was going to follow the same strategy that I followed yesterday, meaning when the SPY dipped and found support, I was going to enter into call contracts. But wait, because again, if I don't know how the market's going to react, and here are the two scenarios. PPI came in hotter than expected. The market quickly dumped from plus 200 to minus 200. Now we're sitting at minus, 130, 120, 110, something like that. Understand, if you're big money and you're heavily leveraged into what you thought was going to be a bull run this morning, and it's wide and vast and spread out, and there are multiple companies doing that and multiple firms doing that, understand that if they are wrong, what would you want to do? So they're holding what they thought was going to be gold, and instead of gold, it turned into a piece of shit, right? A steaming piece of shit. So what do they want to do? Well, they're going to try and pump up the market as best as possible. So the Dow is down 135. So what would I do? I'd be calling my friend at Morgan Stanley, JP Morgan, NatWest, Deutsche Bank, whatever it is. And I'd be like, listen, how can we pump it up pre-market? Dow's down. Let's buy this. Let's buy that, whatever it is. And then what's going to happen is they're going to dump. All right. So what wouldn't surprise me today is if we kind of come out of it the morning, the market opens and we see it turn up, then it hesitates a little and then turns back up. Why? Because if you're going to dump your stock, what do you want to do? You want to get the best price point when you're selling something. If you have something to sell, let's say I want to sell this remote. I want to sell this remote for as much money as possible. So pre-market, this remote is $5. So I'm not going to sell yet. I'm going to let the remote get higher in value, $6, $7. And when it's $7, I'm going to be like, all right, sell all the remotes, sell all the remotes. And what's going to happen is there's going to be a snowball effect. Matt is selling his remotes. Michael's selling his remotes. Susie's selling his results. So again, I'm looking at the 10-year because we saw a spike in the 2-year and the 10-year note. It went up 6-7 basis points, which puts stress on the market. However, I'm looking at it and it seems to be coming down just a little. But again, that could completely be a fake out. We're 8:30, we're 8:43 now, so we're 13 minutes into it. Trust me, there are a lot of brokers, bank executives running around having their meetings. Okay, PPI, Norm, what do you think's happening? Oh, we expected PPI to come in this. Here's where we see CPI, and here's how the market should react. Really? Because Edward had a reverse, inverse position, and we were extremely bullish, and he's bullish with, and these guys, they trade real money. And we're talking about billions of dollars, like $1.2 billion. This guy will have $2.4 billion under management. Now, again, they tend to go with the same positions. So if Joe is saying, yeah, bullish, and they're talking about drinks on Wednesday, Thursday, Tuesday, whatever it is, and that's what these guys do every day, guys and ladies, okay, that they are definitely surprised by this morning's reaction. Again, for me, the safest thing to do, and I'll tell you in a second, the most dangerous thing to do, let's get that first, because if you want to screw your account, the most dangerous thing to do today is to say, okay, the market dumped pre-market. I'm a bull. The market's going to go up 300 points. And what are you going to do at market open? You're going to buy the dip. And if it dips harder, you're screwed. Same is true if you say, okay, well, the Dow was down 200 points. The Dow should drop 600 points today. If the market spikes up to flat or plus 10 points at open, I'm going to buy, 0 days till expiration puts. And then when the market doesn't drop the way that you're expected, you're going to blow up your account. So again, I can definitely see both scenarios playing out. Why? Because every time we have the Fed or we have CPI, PPI numbers, or something to that extent, what do we like to see in the market? Crazy volatility. It's going to drop. Now it's down 300 points. It went from down 300 points to plus 300 points, plus 300 points back to even. Again, so until you understand the ranges, the bottom range, the top range, there is no investing for this guy right here, because I don't want to just get in there in no man's land and go, okay, it should go down. And instead, it was already down enough where it spiked back up. And now I'm waiting to get back to break even. Plus, I'm losing the time that I have. If I'm going 0 days till expiration, I don't really have time. So what I'm likely to do is, however I play the SPY today, and we'll talk about the ranges very quickly, I'm likely to go out till Wednesday of next week. Why Wednesday of next week? Because if I'm incorrect and I say bull, market, and the market turns bearish and it gets even uglier, then I'm screwed. And if I don't buy myself the extra time, then the option that I paid, $1 for will be worth 10% of that. And vice versa is true if you're on the wrong side. Now, if you like to gamble and you're looking for the most risk possible, then you have to analyze the market and go, okay, the Dow was up 200 points. Then it went down 200 points. Now it's minus 80 points. I'm going to take this position at open. And remember, when you have a strategy, even when you're being extremely risky, you have to secure profit. When I brought on Tukey, he likes to scale into a position. Scaling into a position means I've got $1,000. I'm buying a contract for $1 here. So that's $100, okay? The contract goes down to $90 each. Okay, shit. I'm going to buy one more contract. Now I'm for $190, because what happens when it goes to 80? I buy one more contract. So now I'm 3 contracts, average $90. It goes back to $90. Let's say I buy 3 contracts at $90 and then at $100, and then it goes to 90, and then it goes to 80. And I'm like, shit, I can't risk it. I'm just going to sell at 80. So now I'm in for 3 contracts. I lost $20 a contract. That's $60. Whereas if I'm averaging in slowly, one contract. When it goes to 80, I'm not that scared because my average is 90. It's at 80. I'm down $30. It's going to spike back up. Nothing goes straight down. Nothing goes straight up. So again, my suggestion for today is be extremely cautious. So let's talk about, again, yesterday on the bottom side, I thought 393 we'd find support. 395, I was looking for support, but possibly not. That's why I got in and out of my position. And if we saw support at 395, then we could possibly touch 398. We didn't touch 398 yesterday. We saw 397, 36 or 56, pretty darn close. SPY range yesterday, 4 points. Day before, 395 on the top, 392 on the bottom. SPY range, 4 points. What am I expecting today? SPY range, probably 4 to 5 points. Again, because we don't really have the data and information that's coming next week when it comes to CPI. We don't have the Fed's reaction, whether it's 50 basis points next week or anything to that extent. So what do I see? I don't want to say narrow trading range, because what could potentially happen is these institutions, these banks, these hedge funds, they could all basically get together. It's like it's a conspiracy or but they don't really get together like that. But they could speak to each other and say, here's what I'm going to do. Here's what I'm going to sell for my positions. So, I mean, again, with the Dow down 85 points, what could potentially happen? Bull case scenario, it could turn green. Now, if it turns green, all the people that were fighting the SPY at 398 are still going to put up the fight. So it's not like they're all going to disappear and go, okay, you guys want to drive the market up? We'll just sit on the sidelines. No, every time the market goes up, they're going to sell into it, putting downward pressure. So again, I look at Meta platforms. For instance, Meta was down at 102, 104. It was even under that. It's back up at 115. I've heard people talk about, and I've heard analysts talk about 140, 150. But let's understand, Meta still has a ton of advertising revenue issues. So again, companies like that, I would be extremely cautious. Now, if I were going to get into some plays today, let me just see if I have my stock watch list up. All right, so let's just look at the SPY real quick. Inflow, just see it. 3 out of the last 5 days, 4 out of the last 6 days. Okay, and we've been hovering at this level. So it tells me we've had basically a narrow-ish week. So if, again, the numbers came in weak, the market would have exploded. So if the numbers came in weak, we could have saw 406 again on the SPY. The fact that the numbers came in hot, it wasn't crazy hot. It was 0.3% versus 0.2%. It was 0.4% versus 0.2%. And year over year, we are still going down, although we did curl back up. Now, what's interesting is China also came out with their PPI numbers, and China's PPI number came in 0.1% higher, or maybe it was 0.2% higher, but their CPI number came in, and it came in a little lower. So China's completely mixed. Now, understand, said it before. Do I trust China? Hell no. I don't trust anything that China tends to say. Chinese people, fabulous. Chinese government, not so trusting. Okay, so again, the Dow's making a move. What's likely to happen is it's probably going to open right in this range, somewhere between flat and minus 60 points. Now, what is likely to happen is at some point during the day, it's likely that we go back to the pre-market level with the Dow off 200 points. It was up 200 points for the number. So let's just take a look at the SPY so I can tell you where I anticipate the SPY going to. Yesterday's low, 393.27. This morning, where were we at? Let's just see where the low was when we came in and the market dropped. About 393.27. So yesterday's low was hit in the pre-market when the PPI numbers were released. So understand, the reaction of when the numbers are released is generally what happens during the day. So although we saw, Dow plus 200, Dow minus 200, now Dow's only down 50 points, it's likely at some point during the day that the Dow is down 200 points. So that's another 150 points from where we are now at minus 56, 58. Now, if I say to myself, if the Dow has a possibility to go back to the pre-market low and yesterday's low, then psychology tells me, well, if we're hitting that low, we're either going to find major support, but if it breaks the support level, then we can see the next level down. So let's open up the SPY book right now, and let's talk about the ranges and levels. And we'll start at the top, okay? Now, the top was 402.50. We saw it last week. It rejected 402.50. There are numbers higher than that, but we don't have to get into that, again, because the PPI number came in a little hotter than expected. If it came in cooler, I'd be talking about the ranges all the way up to 414. But that's not the case. So again, 402.50, not seeing that. When we go under 402.50, which obviously we're starting at, you're looking at 398 and change, 398.50, 398.60, 398.30. That currently was rejection, looking for, in a bull case scenario, it to break through and turn into support today. But that's not happening. So should the market turn bullish at any point today, I'm going to look for the SPY to reject 398. So that's one of my strategies. Again, the market, it's off 50 points, the Dow, 33 for the NASDAQ. The NASDAQ was up as high as 80 points positive, 80 points lower. But I know that my sentiment has changed. I will be somewhat more bearish now because of the numbers. And again, we have CPI next week and we have the Fed. So if CPI comes in a little hotter and the Fed, then we can see basically maybe like 380 again on the SPY. So if we're sitting at 396 and I'm saying 380, that's a 6% move to the downside, assuming CPI numbers come in. So if you are looking to play a longer term strategy, which I don't like to do, I like to day trade. I like to get in, out, secure my profit, call myself winner. But a longer strategy might be something like, okay, well, if the markets are going to go down and the SPY might test 385 or 380 in the upcoming week or weeks, I'll go out and I will buy a January contract of whatever company that I'm looking for. Let's say the NASDAQ and then the SPY go down 5 or 6% by the end of the year. What's going to happen? Apple's going to go down the same thing. Apple leads the SPY. It leads NASDAQ. It leads the Tech 100. So what would happen? If Tech, the Qs, the SPY go down 6%, it's likely Apple would fall 6%. So if I'm going to be a bear, I might go out till January, and then I would say something like, okay, Apple puts, I know Apple has support at 140, rejects 145, but if the market falls and Apple falls 6% and Apple's sitting at 142, I'll do 6%. That's about $8.50 to $9. 142 brings us down to $9. We'll say $8. Let's see, 8.5. Yeah, 8.5, I guess. So 142, we'd go down to 134. So yeah, I would play some Apple puts, the 140 puts. I'm assuming, I'll give you a real case example. So, and again, that's if you're bearish. I'm not telling you have to be bearish because they could easily buy up Apple. They've been doing it 4 out of the last 7 days. But again, if you go back to November 8th, I would be saying Apple could go down to 134. So if I'm looking at options, I'm going to go out till, let's just say January 20th. So we'll give ourselves more than enough time. I would go to put contracts, and I'm looking at Apple 140s are paying about $5 right now. Again, I would like to see them a little cheaper than that. So I might not go with Apple because, again, you're going to be priced out of that. If I'm looking for Apple to go to 134, possibly by that timeline, if it's a bearish market, and I'm paying $5 for my contract at 140, that means if I'm correct and it happens late in the contract session, I'm only putting in 500. I'm making 600. I'm making 20%. I have to hold 5 weeks, 6 weeks, and I have to hope to be right about my bearish position. So again, that contract wouldn't make sense to me today. That's why I like playing the SPY. So what am I looking for on the SPY today? Again, we started out 398 should reject. Next level is 395, which was support yesterday multiple times. Anytime the market dropped under 395, it was quickly bought up. Understand, there are still banks and institutions that will be buying up the dips today because that is how they're taught to invest, and that is the part of their strategy. So me, again, I'm going to take a sit back. I'm going to see what happens at 395 on the SPY. If the SPY rejects 395, then 392 flat will be in play. Again, if the SPY rejects 395, I believe 392 will be in play today. Okay, and again, Dow's only off 47 points. That's taking a counter position. Again, that's a bearish thought process, a bearish strategy. And if we see 392 today, the next level down, which was major support, would be right around 389. Okay? And again, it's just psychology. If we go down and we breach 395, then I'm going to be saying to myself, okay, the support is gone. If we see the support, great. I can follow yesterday's strategy. I'll see support once. I'll see support twice. I'll go, okay, this is good. Or I'll wait for what I consider to be the peak. Now, the past couple of days, and it started with a 395 rejection 3 days ago, it rejected 3 times. It meant 395 rejected, 395 rejected. Then it went 395.56 and did a hard rejection. So I know the limits are in place. That's why yesterday was such a great trading day for me, because I knew I had support here. I knew it wasn't going to go past this level. I knew on the bottom we could see 393. That is not always the case. Some day like today where the market was up 200 points, then down 200 points, and is sitting at minus 42. Again, I have to go with what happened when the PPI numbers came out in my psychology of thinking about the market and saying, okay, well, they dropped it from plus 200 to minus 200. Of course, it's a quick reaction and maybe it's overdone, but that's still what momentum is telling me. All right, so let me see if we have any questions today. Okay, let's see. This is a random question, but based on trading platforms. Let's say Robinhood. Could there be a chance, like the crypto trading platform, they can screw up the customer? Oh, no. Okay, so you're asking me if somebody like Robinhood could all of a sudden come out and say, hey, shit, we don't have any money to pay anybody. You can't withdraw, and Robinhood crashes and more crypto crashes. No, that is not going to happen with Robinhood. Robinhood and other companies' trading platforms are SEC regulated, meaning they have to keep a certain reserve. Let's remember what happened with Robinhood and GameStop and AMC fiasco. What was it, last year or a while ago? It happened because Robinhood claimed that they needed to have extra money for their clearinghouse, and there was too many trades revolving around GameStop, which had a higher volatility. So that's why they stopped people from trading, or at least that's why they claimed. But again, they had to have a certain amount of money to cover the accounts. So no, I don't see that happening at all. The bad thing about crypto is right now, I mean, if the market does take a turn worse and Romeo's correct and we see 385 or even less on the SPY in the upcoming weeks, again, we're December 9th today. You got about 2 more weeks of trading towards the end of the year around December 20th. Nothing really happens. So I'm looking for a lot of action in the next week, week and a half. I'm going to follow the momentum. If they want to tell me bullish and they want to buy these dips, even though the 10 years at 3.50 and the 2 years at 4.31. 4.31. Yeah, it's up 5 basis points. It was 4.26. Let's just see what happened to the US dollar because that's always a key indicator as well. Yesterday, day before, US dollar spiked. So here's what we got from the US dollar. So PBI numbers came out. US dollar spiked. Market's not so great. What happened after that? There it is. US dollar's coming down. So if the US dollar comes down, the 2-year and the 10-year come down to where they were pre-market, yeah, then I can see a bull case scenario. Again, it's hard to believe that the information came out, the 2-year, the 10-year, and the US dollar spiked. And it's hard for me to believe that saying, okay, that spike was just a blip. It's just going to disappear and we're going to be trading the same levels we were trading at before. Just doesn't make sense to me. With that said, 9 a.m., I'm heading over to Discord. I'm going to talk a little more about my strategies, a potential lottery play or two. So if you want to join our Discord, the link is below. It's easy. You get 7 free days. Not to mention, we offer the same service that Unusual Whales and all these other platforms offer, which is how big money trades using flows and algos, using golden sweeps, using unusual options activity, using bullseye trades. You're not a great trader. Well, great. We have got a platform that allows you to use bullseye trades. So it identifies possible bullish or bearish trades. It tells you a time frame. 1 to 2 days. We could see this happening 3 to 5 days. So it can definitely help you out. I see somebody has a question on Microsoft. Cool chick. Good for you because I've seen you doing a lot better lately. And that makes me extremely happy because that shows me that you're understanding trading better. With that said, Microsoft, I don't want to make a comment about Microsoft because Microsoft is being sued by what is it, the SEC to block the Activision merger because here's what Microsoft does. Microsoft picks up gaming companies like Activision, they put them on their platform, and then they become a Microsoft-only service instead of being open to everybody. So, yeah, that I would not want to talk about. Again, I'm headed over to Discord. You guys can join me. Romeo tends to go live 2 to 3 times a week. I'm giving markets updates throughout the day. So if there's a spike in the 2-year, the 10-year, or a dip, I'm going to tell you about it. So you'll be like, okay, dip, markets can get strong, not by getting caught off guard. Like you're in puts, you're like, shit, why is the market so strong? Man, I'm getting screwed. I'm just going to hold my position because again, as the rates go up, market goes down. As the rates go down, market goes up. So please pay attention to those things. All right, I'll see everybody later. Again, welcome to join me on